Welcome to another Simple Invest video. So today I'll be going through my trading results for 4th of January 2021. Okay, and I'm mainly trading two pairs nowadays. So after some backtesting and research throughout the Christmas week as well as the New Year's week, which I did a little bit of trading, but not a lot, but mostly a lot of backtesting. So I've come up with another strategy for trading the euro dollar USD, and yeah, I'll go through it here. So first and foremost, we'll go through my usual USD Japanese yen pair. And on the 4th of January, I did a total of 4 trades, three of which were losses, and the last one was a win, which almost made my trades break even, but I was still losing a little bit due to the commission that I had to pay and a bit of a spread. So first one was, let's go through. So the first one was around here. So actually there was a sell signal here. So here that you can see that the candle broke through beneath the support for this, which was initially you can see that there's a gap. So why there's a gap, I can't really explain. Probably due to, I can't really explain. Like the market does run 24/7, but why there's a gap here, I can't explain it. Probably as the brokerage servers start up on 000 hours, they notice that there's a discrepancy between the buy and sell trades, between the prices, or maybe it's at that particular time that they sync up with other global servers and other brokerages, and they find that there's a discrepancy in price. There's a difference in price, and they open at this wildly different prices. But as you can see, it is quite most of the time it does seem to normalize back towards the original price where the market closed at the previous night. So like I mentioned, this kind of gaps, you can start a strategy to trade around it, but I haven't done any back testing myself, so I haven't traded. I don't have a system to trade these gaps for now. Okay, so you can see that it went through the lowest price of the day. So there was a sell signal, and I sort of missed it. So I entered it about 3-4 candles later, about 15 to 20 minutes later. But the market still went up and it stopped me out. Okay, and second trade of the day was okay. So for now, what my strategy for the USD Japanese yen is that if I have let's say I made a sell trade, so that means I'm trading into the downtrend. And once the trade has stopped out, or even if the trade is profitable, I will not make another downtrend trade. I will instead wait for an uptrend signal and trade the uptrend instead for the next trade, which is here. So you can see this is kind of like an uptrend candle, but this one was more apparent, yeah, because it broke through this recent high. So I entered a buy trade and it got stopped out. So my stop loss is 50 points. But even if I had bought into this, I would have gotten stopped out anyway. It would have still been stop loss of been stopped out for 50 points. Yep. So let me shrink my portrait so it's easier to see here. But even if I had entered a buy trade here, I would have still have been stopped out for more than 50 points. But my stop loss was set at 50 points. Okay. And so there was a buy trade that's lost. And the third one was a sell trade, which I could have won if I had caught on to the signal on time. So there was a sell signal here, exactly at, what's the timing? 9:35. When this candle closed at 9:35 for this particular Onanda server time, there was a sell signal here and I missed it. I was actually doing something else. I was learning Japanese, actually doing some practicing my Japanese writing, but I missed it until 10 minutes later, and then I entered here. So because I entered on a lower point, this swing upwards stopped me out for 50 points before the market went down. So if I had actually entered on time in this particular candle here, I would not have gotten stopped out, and I would have right all the way into a take profit of 200 points. Even, okay, if I had entered just 5 minutes later, let's say I caught the second candle, I would not have gotten my 200 points take profit, because you can see from here, if I entered in this end of this candle, measure until here, it's only about 190, 195 points. So I barely would not have taken profit. I would not have hit my take profit target. It would have swung up eventually to stop me out here. So this was a crucial lesson whereby entering on the exact candle where the sell signal or the buy signal occurs is so crucial. It's rare, but it happens sometimes, whereby what could have been a potentially winning trade if I entered the trade on time turned out to be a losing trade. You can see that if I've entered it exactly on that candle, at the end close of that candle, I would have barely taken profit about exactly at 200 points. So this was a winning trade, which I didn't take on time. It became a losing trade. And finally, the last trade was around here. So around here, actually, there was a buy signal, but I didn't enter it here. I entered it later, which was here. So I entered it quite late again, but it was still all right because this time it did not stop me out. Swing down, it almost stopped me out, like so close, 44 points down, whereby my stop loss was 50 points. I entered it around here, the candle a bit lower. And eventually I took profit for 200 points. Yep, so it hit my take profit around here. So that was it for the USD Japanese yen. Okay, then next up on the Euro USD. So on the Euro USD, I'm trading a different system now. And let's take a look at 4th of January. So for the Euro USD, I had a total of 4 trades as well. 2 wins and 2 losses. So overall, I made profit because my wins were bigger than my losses. And how it goes is like this. So similar to my USD Japanese yen strategy, I do trade breakouts as well. And when was the first breakout? So my trading starts at 0200 hours server time. And this is not really a breakout. So this is a breakout, right? Minor one, but still a breakout. I entered a trade and I got stopped out. So my stop loss, I would set it at about 1.5 to 2 candles beneath the triggering candle. So for example, if this is the candle that sparks a buy trade, I'll set my stop loss somewhere beneath the close of this candle, probably around here or around here. So this would have been my stop loss. In this case, it was about 50 something points. So in this case, my stop loss for the Euro USD is more dynamic. So if it is there, the triggering candle is a long one, my stop loss would have been also a long stop loss as well. It would have been big stop loss as well. But I tweak my trading size to fit the stop loss. So if I have a wider stop loss, let's say my stop loss is 200 points, my trading size would be a lot smaller compared to if my stop loss is at 50 points. So if I have the 50 point stop loss, my trade size, lot size would have been a lot larger. So overall, I am trying to strike a balance whereby every stop loss, I would put it as 1%, not really 1%. I'm not trading a stop loss at 1% of my account, but maybe a certain 0.3% of my whole account is my stop loss for that one particular trade. Okay, and my take profits will also be a multiple of my stop loss. So in this case, I got stopped out here. So I got stopped out for, let's call it 1%. So to make it simple, let's say every loss is 1% loss, and every gain is a few times of that potential gain. Sometimes it's just break even. Okay, so this is a loss here. And so I'm looking for the next breakout signal. So for the Euro USD, my strategy is different from the USD Japanese yen. I don't trade. That means I don't just for the USD Japanese yen, if I have a buy trade and if I got stopped out of the buy trade, I do not put in another buy trade. I'll instead wait for a sell trade, a sell signal. But for the Euro Dollar USD, I would not do that. That means if there's another buy signal that occurs, I would take the opportunity to enter another buy trade because my strategy is different for both pairs. So in this case, actually there was sell signals, but yeah, I wasn't really convinced because there was a big support zone here. So I was waiting for the price to break through beneath this support zone, which it did not. And this was not really a breakout on the upside because there's a resistance zone here. So it didn't break through here until here, this candle. So here, quite apparently, it did break through the support zone. So what I do is that I use my Fibonacci retracement tool and I configured it to suit my own levels. So what I did is, for example, let's say this is my buy trade. So this is my entry point for my buy trade, and I set my stop loss to below. So let's shift this away. I set my stop loss to lower than the triggering candle, right? So lower than the point where the candle triggered the buy trade. So let's say the buy trade, I think the buy trade should be here, right? And I'll probably set my stop loss somewhere around here. So this is the low of this particular candle. So I probably want to set my stop loss a little bit further, something like this, to give it a little bit more room. So my stop loss is here, my entry point of my buy trade is here. And this, from here to here, would be 1%. If I lose this trade, this would be 1% of my account, for example. Of course, as I mentioned, I actually trade for now. I'm still testing it out. I'm not putting full 1%. I'm putting less than 1%, probably like 0.3% of my account if I get stopped out of this trade. So taking that as a reference, I would calculate the appropriate lot size and enter the trade based on that particular specific lot size. So in this case, what happens is that as the trade goes up, I use a trailing stop method. So for example, once the candle closes past level 1, which is, that means one time of this stop loss for the same number of pips, I would shift my stop loss from here to break even. And in this case, you will see that once the candle closes past level 2 on my custom Fibonacci retracement tool, I would shift the stop loss again from break even to level 1 and so on. So that means I will keep shifting my trailing stop loss upwards as the candle closes certain multitudes of levels above. So in this case, I'm giving the price some room for it to fluctuate and move. At the same time, I'm also keeping my risk controlled by shifting my stop loss upwards and upwards and upwards. So I don't have a definite take profit target. Instead, I would keep the trade until my trailing stop loss get triggered and I get stopped out of the trade. So if, for example, if the pair moves, for example, in this case, you can see that now the pair moves to level 3. The candle closes past level 3. My stop loss would now be shifted to level 2. So if the price suddenly dips and I get stopped out, I still gain 2 times the profit for that particular stop loss. So that's 90 points of, so there's about 90 points of stop loss. Then I actually gain 180 points. 180 points as opposed to 90 points of risk. So this is my strategy for the Euro Dollar USD. So in this case, this can be, so if you have if you're using MetaTrader 4 or if you're using TradingView or so on, you can actually configure this. You can configure your Fibonacci chart under the Fibo levels. You can enter your own levels here and put in your own description and your own colors. So make a custom tool like this. Okay, so let's see where this trade goes. I think, if I'm not wrong, I am not 100% sure whether, I think I got stopped out at level 3. Yeah, I probably shifted to level 3 and probably got stopped out around, let me double check. All right. I got stopped out at 1.22886 at 1400.01. 1.22886 around here. Yeah. So I got stopped out around here, which is about 3 times of my 3 times of my stop loss. So I gained 3%, right? So this is a 3% gain. So 3% gain for this trade. And next up we have this one. So let's shift this here. So this is very obvious that I got stopped out here. That means it was another breakout on the buy side. So I entered another buy trade and I got stopped out quite quickly. So I didn't take this one because this was, let me remove this too. So I did not take this buy trade because this wasn't a very clean, the candle didn't close cleanly above this support resistance zone. So I didn't take that buy trade. And I took this sell trade instead, which was a win eventually. So the candle closed below this support zone. So I took it as a signal for a sell trade and I entered. So let's use my Fibonacci 2 again. I entered trade. So I probably set my stop loss somewhere around there. Can't remember exactly, but probably somewhere around there. That's my guess. And I saw that it closed above my level 1, so I set it to break even. And in this point, I actually went to bid actually because it was about 12. So 1700 hours is 11 p.m. for me in my local time. So I went to bed about 11:30 last night. So at this point of time, since my trade has already set it to break even, so there's no risk on this trade, so I just went to bed. And by the morning, which you can see that the trade eventually went to this level 2, it went past level 3, and it almost hit level 4. So when I woke up this morning, it was around here, I think. So eventually I closed the trade at around here when it looks like the trend was starting to go up. So I closed it around here where I triggered another buy trade for today. But I'll talk about today's trade probably tomorrow on the following day. So I stopped out the trade at about more than 2%, but it's not fully 3% yet. So probably 2.5% or 2.6%, somewhere around there, around 2.6% profit for this particular trade. So they had two losses, minus 2% is balanced by this winning trade, and then I had a plus 3% here. So the Euro USD ended at overall plus 3%. So which was not bad. Okay, so that's it for my trade analysis for my trades on the 4th of January 2021. Hope it helps you out. You feel free to copy the strategy, but make sure to backtest it on backtest it thoroughly so that you know the wins and the win rates and the lose rates before you do any actual trading using your real money. Okay, thank you very much. See you guys next video.